sharing with real estate agents how to grill loan officers, this
setting expectations, there's maybe...
And we all know rate is important, right? Because that is a part of the calculation, but is that the only thing? So, hey everybody, Sean here. Welcome to the Renown Mortgage Podcast. We are so excited you're here. And as usual, I've been giving the Seattle weather update. It's beautiful today. It's really, really good today. People are happy and smiling. And as always, we are here with our founder, Justice Roberts. See, that's what happens. The sun makes me smile. So, Justice, how are you doing today?
Doing great. Enjoying the weather, as you mentioned, and excited to be here with you today.
Come on, sunny Seattle. So today we are going to touch, I love the topic. We got such great feedback. If you didn't check out last week's pod, just our mini pod on bridge loans, whether you are looking to sell your home and you need to process how you're going to move forward. We did a great topic on bridge loans to help you with that. If you're a real estate agent, you just need that 30,000 foot review on bridge loans. Check that out. As always, like, share, subscribe. That's why we're here. Today, we're going to talk about something a little bit different. We're going to talk about tough loans. And one of the things that Justice is actually known for, and if you actually look at one of our most recent Google reviews, it was this loan landed on 4 different desks before it got to Justice. And Justice got it done. And one of the things I always say when people hear that story is like, well, how did that happen? And I said, well, our ethic and our core values of honesty and integrity is of the highest here at Renown Mortgage. And I know that of Justice as well. It's impeccable. So it was done with the highest of integrity, but a different perspective sometimes is the right look that it might take something to move from dead on arrival to, hey, there's actually something here. So Justice, I just wanted to talk to you a little bit about when you see these tough loans, what is it that you do or see that kind of makes you look at it from a different perspective and go, okay, this maybe isn't what we thought it was?
Yeah, I mean, I think there's multiple different angles or ways that I've looked at it, but I'd say what comes forward the most for me is I had an experience years ago, earlier on in my career, where I had a loan that was kind of difficult and it just got kind of pushed to the side, and then the client ended up going somewhere else and they got it done. They figured out how to get it done. And I remember going in the back of my mind, I was thinking, I feel like there's a way to make this happen, but it's just going to take a little bit of massaging. Is going to take like working it through. And I gave up on it and somebody else, turned it into a closing. And I think that really just spoke to me from an integrity perspective of how do I want to show up for my clients? And I'd say leading up to that, I had showed up in a lot of different ways, but this was like a really tough cookie. Like it was a tough loan to get done. And I just kind of had let it slide. And I think that there was something in me that rose up that day that was just like, never again, never will there'll be a deal that comes across my desk that if it can be done, I'm going to get it done. And so I think that belief in the possibility of, there is a way to get something done. And if there's a will, there's a way, and kind of like making that your starting premise. And then we kind of reverse engineer. And then it's all about more about how am I going to get it done versus can it be done or not?
Right. So mindset of, hey, we need to get our brain towards, hey, there is a way. It's not a, I can't do this. It's a, how can we do this mindset? That opens up all the possibilities in the world. We know that, that breaks the scotomas off so that we can actually see those things. So obviously, if you're a client out there going, geez, I don't know if I even qualify, or I've been declined, reach out. There's a possibility. But also, let's put on our coaching hat for agents or LOs who are out there, or agents who are out there. What are some of the things specifically you do, right? I know you are not a withholder of good things. Like you are not a, hey, here's my secret sauce and I'm just going to hide it from you. I know that you really do care about other people's business, even if they're an LO from a different company. I just know that about you. What is it like some of the things that you look at first to make me go, well, maybe we didn't calculate this right? Or what are those things that you do? What's your checklist, so to speak, or maybe a high level version of it?
So a high level perspective, I mean, in a lot of scenarios, when I get these tough type deals, it's kind of running the same process that I run with every client, which is just, I want to high level understand, number one, what are we trying to accomplish and why does it matter? So let's start there. And then from there, then we're diving into income, we're diving into assets, we're diving into credit, and we're diving into collateral, which is one that not a lot of people think of on the outset, but it's like, there's not 3 pillars of mortgages. There's 4: income, assets, credit, and collateral. And once you understand all of those, and I go, okay, I'm wrapping my head around it. And then it's, okay, why wouldn't this work? But it's not from a standpoint of how do I kill it? It's just, okay, the loan could get denied for these reasons. Sometimes if it's a loan that's being referred to me that's been denied somewhere else, we'll start there. Okay, what is it? Okay, they wouldn't allow us, from a debt to income perspective. So then I know that the problem we need to solve is income related, which can be solved a couple of different ways. But with the framework of understanding everything we have to work with, then we know what we're working with. Or sometimes maybe it's a guideline interpretation. Like the income that's being used is what some underwriters said, hey, this is what it is that we need to solve. So it may be an income guideline scenario that we're needing to massage or get a different opinion on, or a different narrative in order to kind of put together, hey, this is why I want to use this specific income. But income is only one reason why loans don't work. I would say it's super common, but then you have assets, which could encompass what money they have to come from, where it was sourced from, reserves, and then you have credit scores. Sometimes automated underwriting or manual underwriting adds different layers. The most recent review that you mentioned, that one was more in regards to credit. And actually understanding the guidelines and what can be allowed based off of low credit scores. So, there's always a way, like there's no dull moment here in the mortgage industry. And it's really just like, okay, what are all the variables we have to work with? And then really, I'd say the next layer, if I'm coaching loan officers or if I'm coaching consumers to find a loan officer with these qualities and traits, it's really just having somebody who's willing to dig into, like, how do we solve this problem? I remember doing some marriage counseling and coaching to pull deals together from a couple that had broken up and that were kind of at each other's throats. And it got denied somewhere else and it got put on my desk because it was like, hey, if anybody can figure this out, it's justice. So we did. But what the solve was not anything to do with the loan. It was having two people like understand each other. And I'm like having to play, both sides of like, hey, how do I help you guys get on the same page and realize that it's in both of your best interests in order to move forward? So like, I'd say it requires every part of your being. It's not just the things that you're doing, it's who it is that you show up as for your clients and for the transaction. And so I don't know, like there are certain things that are so, I don't know if it's mystical or if it's just tough to like, it's less tangible because it's just, how do I show up in a call? Like, I genuinely care about the other person enough to go, hey, how do we find this solution? Or, hey, you're kind of like making a really big ask of, this person who doesn't like you very much at this time. So what if you were to pay them $5,000? Like, would that be worth it to you? Oh, okay. Well, they might be willing to do what you're asking them to do now. You give a little, you take a little. Now we put a deal together. So any number of different ways to, navigate, situations that are relational or even transactional. So
Justice Roberts, mortgage therapist. Okay. So listen, I know we've got to land this really quick. This has been amazing. This might be a two-parter, but let's really quick. I never really do this. I never really commercialize these moments here, but just on the brief, as we're landing this plane, if you can, how does Renown differ when it comes to the levers that we can pull? Because it sounds like what you're saying is some organizations, they've got, A, B, and C, the lever, but when it comes to credit or when it comes to seasoning or things like that, what are the levers that we have and why is it that we as Renown are postured to be able to do that gives us that flexibility, that gives us those lanes that maybe others don't have?
That's a great point. I'd say you can get a mortgage a wide variety of different places. One of the things that makes Renown different based off of us not being tied to any specific bank, it allows us to go to banks that have appetites for specific loan products. And it allows us to go to banks that don't have overlays. Now, that's a lender jargon, lender term, but it's basically like additional rules and scrutinization from a guideline perspective. You're going to go to, Chase Bank, Wells Fargo, some of the bigger banks out there, they're going to be a lot more strict where I may have the same loan product with a lot less strict requirements at the end of the day. And that's because we're not just working with one specific bank. We operate as a broker and have the ability to work with the entire market. So if there's anyone out there who would close a loan that has guideline flexibility, you'll have access to that by working with us.
Amazing. Amazing. Absolutely. As always, this is awesome. We're landing this plane fast. We went actually a little bit longer, but it was so good. Hey, if you are open and ready to have a conversation about what it is that the biggest financial, decision that most families make, and you want somebody to walk with you through mortgage therapy, a new word I think I've just created. I don't know if that's a thing, but not licensed mortgage therapist. But if it is something that you are looking to do and you want a team of people who are going to be on your side and walk you through this process, Renown Mortgage, we are here for this week. I am Sean. We will absolutely see you next week.